Good morning, everyone. This is Daily Trading Analysis with a market update after all these days of huge earnings and the FOMC yesterday. Today's video is packed with information for you to gather updates and also insight in today's forecast for the trading markets. We are going to start with the economic data, then we're going to review the earnings and then the FOMC press conference that provided a lot of useful information for today's market day. So let's start with the 30-year mortgage, still flat, 6.87. We were seeing a decrease from the 7% that was on early July. So this is for sure good for the people that wants mortgages because rates are going higher, as it's the forecast for the terminal rate that we are almost there in the federal funds. Applications continue lower though, minus 1.8%, and overall refinance still there. A lot of people is trying to refinance now that interest rates are going lower. So good luck for them. New home sales month over month for June came in the negative. If we saw 3 months in a row of positive new home sales, but now minus 2.5. I mean, prices are going up way higher than expected. So it came lower than the 725,000 that was expecting. So certainly we are seeing some slowdown and some cool down in the home sector. We are going to analyze Fed interest rate decision later on with detail, but for now, just know that 25 basis points was increased yesterday. But now let's just jump into the earnings. We are going to analyze Microsoft, Alphabet, Meta, and also some Coca-Cola and Snapchat due to consumer discretionary to really gather the sentiment there. Let's start with the little ones. Coca-Cola raises full-year outlook as earnings beat estimates. Earnings were almost 12 billion, 11.97, 11.75 as expected. Reported net income attributed to 2.55 billion, so 59 cents per share, up from the 129. Net sales rose 6%, and now expects comparable adjusted earnings per share growth of 5 to 6% on the forecast. The prior forecast was 4% to 5%. So this is good news for Coca-Cola, and that's why we saw these. Let me show you this huge increase into the pre-market, and after hour we're pushing higher, then into the open we dumped, and now we recovered. Quite a lot of volatility due to a lot of factors, but overall earnings and looked good. And on the daily, we can see the huge candle, 1.30% on the day. And as you can see, we've been curling and trying to hold these levels to break the 64.50 level since April last year. So if you are investing in Coca-Cola, I think you are in a good spot. That's my opinion. So let's go to now Snapchat. Social media stock dropped 40% on weak forecast. You know that in markets, forecast and expectations is everything. And if we check the actual numbers, shares stumbled over 70%. We're going to see that in the charts because we got EPS of 2 cents versus 4 cents. Revenue 107 versus 108. Daily active users, DIU 397 million more, but average came a little bit higher. I think the key here is that the overall company sales in the second quarter declined 4%. And also issued financial guidance for the third quarter that it says is built on the assumption that the company's daily active users will reach between 405 and 406 million. So negative 5% to flat over year growth. That's the key to understand here. And if we are going to the charts, if we check the chart, we can see heavily the gap down and the minus 14% on the day due to these earnings. So look at this huge drop after hours, and then it couldn't recover. On the back of the day into the afternoon, we recover a bit, 3%, but the message is there. And if we check the daily, I mean, we were trying to cool off the lows, and this is just a hammer for Snapchat. Let's now enter into the big ones. First, Alphabet. Alphabet reports better than expected quarterly results driven by growth in cloud. You know that Google is all about ad revenue, cloud investments, and infrastructure, and also now AI. Three key pillars that we are going to check. Shares rose 7% in extended trading hours. That was insane for Google due to this. EPS 144 versus expected 134, and revenue topped almost 2 billion from 74 expected 72. Now, the breaking down. YouTube ads came higher than expected. Google Cloud way higher than expected. And then the acquisition cost is just details, also higher than expected. Second quarter revenue rose 7%, and it's the fourth straight quarter that Google's parent company reported growth in the single digits as it reckons with a pullback in digital ad spending. It's less growth than expected, but the numbers are there. So this is good news for Google for sure. If we check the chart, investors are liking what they are seeing. 5%, 5.6% on the day, now breaking this pivot of June this year and approaching this huge level that is from April last year that a lot of stocks are watching, in this case 144. We are just gapping up, huge gap here, and the move after hour was pretty much insane. Look at this. This was afternoon before earnings, and then boom, 7% growth EPS and 2% in revenue. Quite a big of a hit then the consolidation yesterday and the volatility of FOMC, but we remain there. We hold this resistance that is now support, most probably. So this is good news for one of the biggest tech companies, one of the bigger tech companies, but this is Google. Now Microsoft, if we check the actual where we are, like where it was, sorry about this, here. Microsoft Cloud revenue, 21% from the 23%. That's one of the key issues, cloud. Then we have Azure and other cloud services, 26 coming from 27. And then if we check the details on the EPS, we don't have that. No. So basically worse than expected. Yeah, we have here 2.69 versus 2.55. That's good. 56 versus 55 on the revenue billion implies a 5% growth, but falls short of the consensus of 54.95 billion consensus. So the revenue rose 8% year over year, but Azure revenue grew 26% faster than the 27% growth in the previous quarter. and 40% in the year-over quarter. So we are going down. Forecast, the guidelines, and also AI. There's nothing regarding AI in here. And that's one of the things that I think people was expecting, because basically Microsoft is not providing AI numbers, and people were expecting the growth, the revenue, the income, the net revenue that Microsoft is getting from AI, and it's not in here yet. So people was left with a little bit of emptiness, and investors don't like that. So if we actually check the Microsoft push, we see the volatility and then the press conference. Nothing burger. We, I mean, Microsoft could handle this better, but I guess it's not the time to talk about AI yet, because it's a recent investment and they are not providing numbers yet. But it was quite disappointing, minus 4% almost. If we check the actual volatility in here, that was from the close, the bottom was 5%, and then we started and we closed at almost 3.69. Yeah. So the volatility at the open yesterday, and then the FOMC, nothing there. So quite a disappointment, because yesterday was a little bit of a tricky day due to all these, because Microsoft was showing weakness, Alphabet was showing a lot of strength, Apple was chopping around, consumer discretionary was not there, so Amazon and Tesla were not pushing properly. Amazon price action was super weird. And then the overall Nasdaq and the markets were flying around without any kind of direction, and ahead of FOMC it caused a lot of confusion, and I didn't trade, and that was a really difficult day to be sitting tight and basically having a lot of patience. Then we have the FOMC. We are going to review that later, but now let's talk about Meta, because yesterday after close, Meta reported earnings, and oh boy, it blew expectations, reported better than expected results, and issues optimistic guidance for the third quarter. And that's the key, as always, forecast. The guidance for the next quarters: 2.98 EPS versus 91, and 32 versus 31.12. DAUs of 2 billion, 206 versus 204 expected. Monthly 303 versus 3 flat, and average revenue per user, that's key, 10.63 versus 10.22. Revenue increased 11% from a year earlier, and the forecast for the third quarter of 32 billion, it's basically suggests in the lower range at least 50% growth, and that's what investors like. The stock is up 160 this year. That's unbelievable. We are going to review that. And we know that Zuckerberg has been pushing for Meta, cutting jobs. This is the efficient year, the cost-cutting year of efficiency for Meta. And the company is now forecasting capital expenditures for 2023 of 27 billion, down for the prior estimate. We know that they are investing a lot in the metaverse, and investors are also watching that. So the headcount declined 14%, but only half of employees are included in these earnings. So I think more headcount and more cost-cutting measures will be reflected in next quarters. So overall, really good news for Meta, that if we see the charts, we are certainly seeing after hours a huge push. We were 8%. We are now at 6.70%. Huge day. This is going to pump a lot of sentiment and most probably the Nasdaq. And after yesterday's FOMC, we might see a better than expected sentiment towards the end of the week. And that's important to assess. Let's check the daily on Meta, because we are basically, as the article was saying, since 2023, we are 160% at the top. This is huge, huge. Meta is one of the most insane recoveries, insane charts that I've seen in my life. This is insane. So now that we covered earnings, now that we analyze where we are in terms of expectations for all these big tech companies, we are going to jump into the statements for the FOMC. And let me tell you, the 25 basis points was unanimous. Unanimous, every member was voting for that, so there is no discrepancy on that. Everyone was expecting that, and they provided the expected hike. Now, the guidance. We will continue. We will continue to assess additional information and its implications for policy. As always, they are assessing day by day, data by data, and recent indicators suggest economic activity has been expanding at a moderate pace versus the term modest pace that they shared in the June statement. So we changed from modest to moderate. Moderate is higher, in my opinion. I think modest is slower than moderate. So economic activity has been expanding. That doesn't mean that inflation is going higher. That, I think this sentence reflects the sentiment of a strong economy. We will continue to reduce bond holdings as described in previous announcement plans. So the Q2, the quantitative tightening, it's still going on. I've seen that they are still selling holdings. So this is putting pressure on the market. But with this AI boom, is nowhere to be seen. The selling pressure that it's producing the reduce on the bond holdings. Tighter credit conditions are likely to weigh on economy activity, hiring, and inflation. So they are saying that obviously banks are going to tighten credit and loans to the household and businesses, and that's going to provide more pressure on economic activity, on hiring, and on inflation. So maybe they don't need to continue raising hikes more than we are already there. Fed to consider extent of additional firming to curb inflation. They left the door open for more hikes. And look at this sentence. I would say, this is from Jerome Powell in the press conference. I would say it's certainly possible that we will raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady, and we are going to be making careful assessments, as I said, meeting by meeting. So that's the thing. They are going day by day, meeting by meeting, and oh boy, yesterday we got a lot of action. As I was saying, we were chopping around this bounce of, this is the blue dot line, last week low was beautiful. Then we tapped that again because this is 2 p.m. They released nothing burger, and then the press conference. Volatility up, volatility down, bounce, and as always, big funds, big banks taking liquidity both sides. And then where we finished up here. And this is quite a nuance. We have to see where the close were and how the daily looks after all the day is happened. And we bounce. We are holding this last week low and with a nice bottoming tail. still red, but I think the markets expected what Jerome Powell said, and they are still pricing in only this rate hike. Only this rate hike. So no more rate hikes from bonds market nor analysts. 78% of being flat, only 22% for another 25 basis points in September meeting. November, the same, a little bit higher, the probabilities for another hike. But as you can see, the most probable outcome is staying there until March. March, we start cutting. It's not as clear as the previous ones, but 40% for the 25 basis points cut in March 2024 versus 23. This is quite volatile number. Sometimes we see almost flat in March, but overall, we are going to see the markets expect no interest rates hikes anymore. So if we start seeing new economic data that suggests that inflation continues higher and maybe the Fed is going to raise hikes, that's going to be a nightmare for the markets. Because markets are all about the expectations and they expect no interest rates. This is September interest rate futures and we are seeing 5.35. So no interest rate hike. Interest rate hike would be like up here. So we want to watch this September and also December. December didn't move. 5.4. We are in 525, 550. So if we start seeing these two futures, interest rate futures on September and December start creeping up higher for this pivot at 5.6 or 5.17 here, that would be a disaster for the stock market and for the stocks, also for futures. So take a look at that and also take a look at the dollar. Dollar, after this sell-off, I was expecting 102 to reach, but we are now producing a lower high in here, lower than expected at 101.6. I need to see if this support is now providing support again and we do something like this, because that would provide a higher low in change of trend. But watch the dollar, because dollar has the key for earnings and also for the stock markets. A strong dollar is bad for the stock market. Now, with yesterday's price action quite volatile and closing here where we are right now, look at this. We are squeezing higher in the overnight. London Open just started 2 p.m. at 3 p.m. sorry, and let me tell you, we are 0.70% in the green in the Nasdaq futures and 0.30 on the ES. Both are higher value and out of range of yesterday's. Nasdaq is pushing really higher, building cumulative delta, and there's a lot of longs in this overnight. We'll see what happens today, but we are leaving behind settlement, higher close, pre-market lows, and even yesterday's high. We are seeing that as support. So on the 30-minute chart, this was the third stepping down, the consolidation before the FOMC, the bounce, and then we are up here. We have a lot of weak structure to the left at 15,750 towards 870. And that would be the range. This range is going to be today's target for me. If we reject, we may see lower. We have to wait for the open to see if the overnight inventory long gets rejected and we bounce, or we have two outcomes possible. Just do like this and continue building, or otherwise we might see a gap fill and then we can start building again. If we gap fill and start seeing this lower high below yesterday's close, the target would be complete retracements of yesterday's price action. So I really doubt that is going to happen based on the gap that we are getting right now in overnight, but that's my forecast, my expectations. So watch dollar, watch the levels from yesterday, and I think we are going quite optimistic to the end of the week. Let's see what happens today, Thursday, tomorrow, Friday, and towards the weekend. Everything can happen, but I think the stock market it's pumped. We just have to see what we are seeing on the overnight. So be really careful, manage your risk, be disciplined, because that is going to be the difference between the success and the failure in this market. So thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, and expect new videos next week, because I upload new videos every single day, reviewing earnings, technical analysis, fundamentals, economic data, and also providing my outlook and my expectations on the price action. Thank you for your time. Stay safe and see you later in the afternoon with the market update.